All right. Hey everyone, Mark here. Thanks for joining me for another Bitcoin and stock market and gold weekly price action forecast. Now, the objective here is to try to gather clues from the charts so that we can get a sense of risk and levels for the coming days. Okay. So again, this is important because these aren't predictions. What these are basically clues to help you really mostly evaluate risk, and then you can determine if that risk is worth taking. Right now, most things are not. Okay, so anyway, let's get right into this. I want to talk about, first I'm going to do the economic calendar, then I'm going to talk about Bitcoin real quick. I'm going to do the stock market, NASDAQ, and then we're going to look at gold very quickly. Thank you for putting your questions in the chat. I want to try to spend as much time as possible on those. So if you're new to the chat, just share your symbol. If it's a coin, put USD after it. Also, if you can just do one symbol per person so that I can try to get through more people. And then once I get to yours, or if you want to put your next symbol on a separate line, at least that helps me get to more questions. Okay, so let's get started. This is for educational purposes only. For investment advice, please consult a licensed investment advisor. Okay, so let's get into it. First thing, like I said, I want to talk about the economic calendar. I just want to spend a quick a couple of minutes on it because you should always be aware of what's going on during the week. Now, let's talk about, hold on. Now, I don't use the TradingView. I'm simulcasting, by the way. I don't use the TradingView economic calendar, but you should because it's just a personal preference. It's just one I've been using for a long time and I like it, and that's it. There's really nothing special about it. Hold on, I'm just adjusting my microphone here. Okay, so let's talk about this real quick to look to see if there are any important reports coming out this week. This is important, especially for Forex. Let's see, so we're starting out 7:50 p.m. That's tonight. Japan, gross domestic product. Okay, that's not a big deal. On 6/8, which is tomorrow, we have the European GDP. And then that's usually around 4 a.m. Eastern time. I don't have the timestamps on this thing, so if you want to know more about the particular report, I suggest you look it up. Then there's China Consumer Price Index. These aren't really big numbers. On the 9th, we have the Bank of Canada interest rate decision. That can move the Canadian pair somewhat, but it's not really a big dollar mover. And right now, we have to really focus on the US dollar, especially right now, because that's really what's going to determine how everything else behaves, okay, at least over the short term. And that's really a function of interest rates. So we have on 6/10 the ECB interest rate decision. So those are pretty important reports. I mean, if there are any surprises there, okay? Then they have their monetary policy statement and press conference. That's all on 6/10. That's usually at 4 a.m., 5 a.m. You have to check the time. Sometimes it's at 7:30 a.m. Eastern time. So again, I suggest you look that up. Now, on the 10th, we also have for the U.S. Consumer Price Index. That's usually around 8:30 a.m. Eastern time, or sometimes it's at 10 a.m. Eastern time. Now, that is somewhat of an inflationary gauge. So if there are any surprises there, you may see a jump in the market, okay, possibly. Now, here's really the big thing for this week that's probably going to create a lot of tough price action, and that's on the 10th, we have the G7 meeting. The European G7 meeting, that's on the 10th to the 12th. And then on the 11th, we have the Michigan Consumer Sentiment Index for the US. That's not a big number. But that G7 meeting, what that can do, it's really not the outcome of the meeting that matters. It's the anticipation of potential surprises, okay? So what that can lead to is a lot of erratic or price action that doesn't really go anywhere. Low volume, very tough to trade. This market, this type of environment is usually, if anything, it's usually better for day traders because they're not exposed to that bigger picture risk. They can take small bites out of the market and they're done with it, okay? People that don't understand the difference between day trading and swing trading, or if you're new and you've never really put on any day trades before, I do not recommend it. It's very hard and it's very easy to lose money. Okay, so what do you do in these situations? Don't trade. That's also an option. Okay, that's what we're doing. We're just staying away from everything right now. Okay, so let's talk about a couple of things. Speaking of that, let's begin with Bitcoin here. And again, I thank you everyone for your questions. I am going to get to them, so please ask them as I'm going through my stuff here. Okay, cool. And by the way, if you want to tell me what country you're from or what city you're from, that's always fun to hear. All right, so let's talk about Bitcoin first. Now, let me ask you all a quick question. And let me know, I don't see any complaints about the sound, but if there's any sound problems, please let me know. So here's the Bitcoin situation. I wanted to ask you all a question. How many people got long here in this candle right here? Be honest. How many people got long there? It was funny. The reason why I bring that up is because I had a spammer in my previous stream, and the guy comes in and he was trying to promote his guru or whoever he was trying to promote, and he tells everyone, oh, yeah, the guy got short at 65K, and now he's long at 39K. Nice job, fake guru. By the way, if you have to spam my chat, you must be desperate because, it's not like I have 3,000 live listeners. So just in case anyone has any ideas to spam, you should spam someone else. You'll probably get better traction. Plus, my listeners tend to be more informed. So anyway, who got long there? Now, the thing is, we stayed away from this, right? I had people asking me about this. Is it a long? Is it a long? And we said, it is possibly an aggressive long, but the problem here is 40K. That's the problem. It's a resistance area. And I wrote in my TradingView analysis yesterday, if you read the analysis, and by the way, this is a good time to ask questions in the TradingView channel if you've read my analysis, because it's hard for me to go back and look through the forum and all that. So ask your questions here in this chat. It's better. I talked about this 40K resistance, and as long as this stays intact, we're not going anywhere, okay? This also goes for all the garbage altcoins. Yes, I call them garbage because most of them are. They're not going to go anywhere either. Now, some of them, they try to show something promising because, when I check out each day, when I look at Bitcoin, I check a bunch of altcoins because I want to see, what they're saying, right? But usually, some of them, like I'll see some attempts at, they'll have some buy signals in them, but Bitcoin's not really doing anything. So I know that if Bitcoin doesn't agree, or if Bitcoin does this, because 1 minute it was looking good, and now it's not looking so good, the altcoins turn right around and they follow. That's why you cannot treat them as individual instruments. You must treat them as basically a smaller version of Bitcoin. So here we are. Bitcoin is now, that 40K is still intact, and the resistance has asserted itself. Now, here's another thing you need to keep in mind. This structure, now I'm not bearish on Bitcoin, okay? I'm generally not bearish. But this structure right here, that's a bearish structure, all right? Now, notice I'm not calling it trend. Trend is a different thing. That's a much bigger picture idea. A smaller picture or shorter time frame, this structure, the 40K break, 50K and 40K break, that is still intact, and that's defined by 40K. So lower highs often lead to lower lows, right? That's why I'm staying away from this. Earlier today, we had a buy signal in this thing. We had this little inside bar situation, right? And as you can see, it's turning to garbage right now, right? As we're watching this thing. So what do you do in these situations? Well, if you got long up here, or if you're long now, this is what you don't want to see. Now, we still have a few hours before the candle closes, and it can change. But the thing is, bullish momentum doesn't look like this usually. And usually, bullish momentum takes out resistance levels, okay? It doesn't hold them. So that's basically like this little mini double top. I'm expecting 33.5 to test maybe, tonight, maybe tomorrow, and possibly 30K as we go into Thursday and Friday. I mean, that's basically what the chart is saying. Again, the whole point is here is to gather clues, technical clues, to see what we are looking at reasonably this week based on this structure. So that's what I'm looking at, possibly 33.5 or 30 even. If we clear 30 even, that's not good. That will be a lower low. And then we're looking at possibly 26. Now, this is not a prediction. Okay, I don't make predictions. I let the market tell me what it wants to do. Right now, that is what it's saying. Now, it may hold 30K. If it holds 30K again and gives us a signal, then I'll be open to it. It's aggressive because it's going against the momentum, but I'll be open to it because the reward risk is attractive at these levels. Again, I'm talking from a swing trade perspective. And, there's plenty of potential to test maybe 40K again, or maybe into the mid 40s. I'm expecting 50K to hold. Keep in mind, I'm viewing this entire thing as a wave 4. All right, we're in this wave 4. When we cleared 40K, that was the confirmation for me, which means we're probably going to have a tough time at resistance levels. We're not going to clear them and make new highs, most likely. Okay, at least for the next few months. That's what a wave 4 is like. Again, if you want a good example of a wave 4, go to gold, XAU, USD, and look at it from August of 2020 to March of 2021. That is a wave 4. All right, and as you can see, there's a lot of false moves in there. A lot screws up a lot of people because they don't know what they're dealing with. So we adjust our expectations. I'm not expecting new highs. I am focused on the supports. Now, why am I not bearish? Because this is not a bearish market. All right, if I zoom out here, you can see the bigger picture is bullish. Higher lows, higher highs. This is just a corrective move. It's a corrective consolidation, just like gold from 2075 to 1675. Okay, it pulled back 300 points or whatever, 450 or whatever the amount was over 8 months, and some people actually had the confidence to call that bearish. Wasn't bearish. All right, anyway, so it's the same situation here. This is not bearish. Again, for our time frame. If you're watching a 5-minute chart or something like that, you're going to see something different. And anyway, that's for day trades. If you're watching a 5-minute chart and you're not day trading, you're going to have problems. Okay, I'm just telling you from experience. All right, so that's Bitcoin. Let me see, how much time did I spend on that rant? Let me see here. Okay, not too bad, not too bad. Let's go into the stock market real quick. Now, again, when I cover these like Bitcoin, the reason why I cover these markets like Bitcoin, the stock market, and gold is because they're broad markets, right? Bitcoin is a broad market, and you can use that as a gauge for your altcoins. I say that a lot, and still people don't do it, but you can do that, right? So wherever Bitcoin goes, your altcoin is likely to follow. So that's what you really use as your guide, not the altcoin chart itself. The chart itself is meaningless if Bitcoin doesn't agree with it. All the signals that show up there don't mean anything. Oh, G-Manel. Oh, he sent me a hunt. Thank you, G-Manel. This guy sends me coins every week. I appreciate that. Thank you very much. It's very generous of you. Thank you. He didn't even ask a question. Thank you. Okay, so NSX. Let's talk about this real quick. Look at this situation right now, okay? This is a daily chart, of course. And I'm opening this up because this is a tricky market. Now, we had NFP on Friday, which the market loved. I mean, the market just went straight up, like 250 points or whatever. And I don't know what the outcome of the report was because I don't pay attention to the report. I'm only interested in the price action, and the market liked it for whatever reason, okay? Now, the thing is, where are we right now? We're up 40 points. This thing is at 13.8. That's a higher high. So this is going to suck in a lot of longs. You're going to see a lot of shorts covering. But this is still a tough spot for swing trades as far as stocks go. Because, yes, we're clearing it. We haven't closed, right? We still have about, 40 minutes before this market closes. It may turn, right? We don't know. Or it may give it back tomorrow. I don't know. But as of right now, if you're in a market stock, market stocks are highly correlated stocks like Microsoft, Intel, all those. I mean, look, let's take a look at a couple, right? Facebook. Look at this. Facebook, new highs. I'm sure this is on the mainstream news. Oh, look, Facebook, new highs. How about other ones? Google. Let's see. Is Google making new highs? Trying to. Okay. How about Apple? Apple. APPL. Is that the no? AAPL. Can I get the symbol right? I should know that one by now. Okay. So let's see. What's Apple doing? That's really not that impressive. Okay. So Apple's really not in on this game. How is Microsoft? All right. Look, there's some strength in some of the market leaders here. How's Intel doing? Not that great. Okay. So the point is, why do I look at these? How about NVDA? All right. Oh, look at this one. All right. This one's basically just coming off its high there. So there's some strength in some parts of the market. Okay, fine. It's going to drive the NASDAQ higher. But the thing is, the risk is high. Do you want to buy these things up in this area? This is not a support, and that's my argument. So if you're in stocks, again, this is coming into an area where it's not a bad place to be taking stuff off the table or whatever, but taking new positions, if it's a correlated stock, it's just very high risk. Now, we're fighting a stimulus market. So as long as there are no bearish catalysts, any major bearish catalysts, this market's probably going to just grind higher and higher, right? As long as there's no volume and it can just continue this grind, we may test that 14K high. Now, this is not good for our SQQQ position. I have an options position that I've had for some time, and I may have to close that for a loss. Again, another loss on that SQQQ. I've been discouraging people from taking the options because the time decay is too high. So if you're going to do it, you do it with the ETF outright. SQQQ is a short position. It's a long position. It's like buying long shares, but it capitalizes on the short side of the market. And there's no sell signal here, right? Because I had some questions about this on Friday. Should I get into this now? No, there's no sell signal. So it's very aggressive stepping in front of this. This thing may go to 14K. So at this point, there's a higher low, and it's got the higher high, and there's no sell signal. So the conclusion, just stay out of its way. If there's some stocks you like and you want to give them a try because they're breaking some kind of resistance, okay. But the thing that you have to do is if it turns red on you, like let's say, you buy a stock. Let me see if I can find one real quick. How's TSN doing? Okay, that's not doing so good. Let me find another one. How's CAR-G? These are all trades of the week that we sent out. Not doing that great there. I'm looking for one that tried to break out. All right, so here, I'm just going to use this as an example because it doesn't matter the price action now. If your stock looks like this, okay, you have this consolidation like this, and you buy it, it tries to break out, and you buy that breakout, and the next candle that you get, well, forget this red one. Let's say it kind of looks like this over here, right? Trying to break out, next candle turns red. Or it kind of does this green one, right? Something like that. And then you get like these red candles like that. That's not a follow through. That's not the kind of follow through that you want to see. If the stock market fails and your stock is acting like that, it's probably a good idea to make the adjustment and get out, even for a small loss. That's how you manage your risk. The mistake people make is they go into hope mode and they just hold on to it. And they're like, well, it'll come back. It'll come back. The market's strong. It'll come back. Facebook made new highs. It's got to come back. Right? And they don't come back. There'll be a point when they don't. And that's when you get caught in these things and you lose 50% of your account. You need to avoid that situation. Okay, so anyway, that's the stocks. Now let's talk about gold real quick. By the way, if you have any questions about that, please ask them in the chat. Let's talk about gold. Look at gold. Now, gold is a reflection, obviously, of the dollar. Okay, this is basically reacting to the dollar. And all that, whatever the NFP report was on Friday, obviously, it pointed to the inflation scenario, obviously, because gold likes inflation, okay? If they were going to raise interest rates, if there were any hints of that coming out of the NFP report, based on how that report came out, the market anticipates what the Fed is more likely to do, right, based on the results of the report. So this tells me that obviously they're going the inflation route, meaning they're not going to raise interest rates anytime soon. Dollars, they're just going to keep printing more and more dollars. They're going to keep sending money to everyone and all this other stuff and blah, blah, blah. And gold is just going to keep going higher. So we had that bearish price action the day before, right? I assumed that was part of the ADP, a result of the ADP report, which came out earlier that day. Again, I don't trade on that stuff. I was just figuring, well, what else could the catalyst be to knock gold off like that? But it turned right around. Okay, so great for gold mining stocks. We're out of our gold stock, our swing trade. You can see the trade here. I've showed this before. Our third target was 1880. This was a trade I keep talking about, right? We didn't buy it at the low of 1675. We waited for the double bottom. As you can see, that took about 3 weeks between those two lows that we had to wait before we could get that trade off, okay? And it took about 2 months for it to reach all three targets. Now, this is a higher low in gold. This is still a little risky area to put on more. So I'm not going to call a new swing trade in this situation. I want to see it nearer that support and a better candle. The risk is too high. My point is, if you're in gold, you just let it run. There's nothing to do here but let it run. What is this area here? 1950s. That's the next resistance. Okay, so if it clears 1900 effectively, I mean we're at 1899 right now. If it can clear this previous high, we're looking at the 1950 area possibly next. All right, so that's good for your wheat and precious metals. I mean, the gold stocks barely even pulled back on that 30-point gold pullback. NEM, I mean, look at these things. That pulled back somewhat. AG is another one. This is a silver miner. They didn't really pull back. So there's a lot of strength there. We know about the seasonality with gold, and right now it's a stronger time. So that's why I'm not too worried about pullbacks if you're in. If you're not in, just wait for a better level. That's really my conclusion there. Other than that, just let the market do its job. Okay, so those are the ones I wanted to cover real quick, again, as a broad market overview, and that's what we're looking at. So I'm expecting gold to be higher as the week unfolds. I'm expecting the stock market, the way the stock market looks like right now, looks like it wants to go higher, okay, and Bitcoin looks like it wants to go lower. Those are the conclusions that we could draw from the charts right now. All right, so let me get to your questions, because again, I appreciate everyone's questions. Those in TradingView, good time to be asking me questions. I don't see too many there, so that's good for my other chat here, because I could spend all my time on your questions. All right, so let's get started. Hey, Wedge, good to see you. Blue asks a question here. Oh, from Paris. Hi, Blue. So, could you draw a parallel between the current situation and what happened in March 2020? And he's talking about Bitcoin. So let's go back to Bitcoin here real quick. Now, here's the thing. Again, G-Man, I appreciate these coins. Thank you. So March 2020, let's go back and let's see, March 2020. Now that, of course, we know what the catalyst was back then. Here's the thing. You can't really draw a parallel, okay? And the reason why is back then, right? Let's just go back. Let's go back. This was March, okay? You had that nasty candle and Bitcoin here. I'm going to just make that a little bigger. Bitcoin went to 3,000, okay? And you had all the fake gurus, plenty of them on these public platforms calling for Bitcoin going to 1,500, all this stuff right here. Now, there's no parallel. The reason why is because this was driven by a very specific catalyst. We don't have that today. There's no catalyst in the market right now. I mean, what drove Bitcoin to lose 50% of its value since the 65K high? Elon Musk. I mean, what else was? Bitcoin fundamentals have not changed, okay? The technology has not changed. Nothing has changed except the price, right? So we were at 65K, what was that? Back in April 15, around there, and now we're fooling around, 35K. Elon Musk. So that's, he talked the market lower. These things get ahead of themselves. You cannot pay attention to what people say. And also, this is a great piece of evidence or a great learning opportunity to realize that fundamentals mean very little, especially on the short term. Now people go, but Bitcoin, limited coin supply, and, it's going to be 100,000. Yeah, that's nice. But why is it at 35K right now? Because markets are irrational, right? So what drives a market is perception of the future. And right now, obviously, the perception isn't good right now for whatever reason. It doesn't matter why. That's why price action offers so much value, because it doesn't opinionate us really. It just gives us facts. There's a lower high here. Often where there's a lower high, there's a better chance of a lower low. That's it. Okay? That's all we need to know. So there is no parallel between back then and where we are now. There's also no catalyst in the market. So that's why when people go back and they say, well, let's look back at, 2015, and it was a different time, okay, in 2015. Institutions were not heavily involved like they are today. There were no futures contracts in 2015. So we're in a different environment with different catalysts. That's why the price action factors all that in. You don't have to sit there and draw parallels or get all wrapped up in useless information, okay? So again, that's a big advantage of technical analysis that a lot of people don't realize. So thanks for asking that question. And then he's also asking here, could you comment on BioNTech, BNTX? Okay, stock, BNTX. Let's take a look real quick. Okay, I mean, obviously we looked at this before because I got lines on my chart here, and it broke out, okay? This is a great example of a breakout. Look at this. Now, this is what I was trying to say before when I showed that chart of CAR-G. When you break out like this and you buy it, if you buy that breakout, again, it's a risky thing to do because you don't know if it's going to do this. So if you get a red candle, okay, which you got one here, right? If you get something like that, that's where you need to be prepared to make the adjustment, okay? You need to be prepared. So you have to put your stop somewhere, perhaps raise your stop, reduce your risk. Maybe you even exit on that, and then the next day you get up and you're like, oh man, this thing is $10 higher. Why did I get out so early? But that's, these red candles, you have to watch out. The one thing you could do in this type of situation, all right, again, is the red candle forms. It doesn't mean you have to bang it out the second the red candle closes. You can put the stop somewhere below the red candle, which is what, 214.32. So you figure maybe 214 even, maybe 213. You give it a little room, and then you see if you get stopped out or not, right? And you let the market make the decision for you. And obviously the market went higher here. So what do you do with this now? Nothing. If you're in this, great. I hope you locked in some profit, especially with this pin bar developing up here. But this is not a sell signal. Not yet. It needs to close like this, and it needs to take out the low, which is 243.5. Okay? Plus you have a little gap in there. So great if you're in it. If you're not in it, don't touch it. Because the next support is this old resistance here, which is again around 208. So there's nothing to do at this point, right? So just let the market work. That's really valuable because a lot of people, they chase these things and they get in. Maybe their friend told them, or maybe a guru pointed it out, and they're like, oh yeah, this thing's up 10 points today. It's going to be up another 10 tomorrow. You're going to be a millionaire by the next week if you just buy this thing now, blah, 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 right? And then it just pulls back, and you know how that goes. So yeah, wait for supports in this situation, but great looking chart, okay? Again, this is a nice example of a non-correlated market because, I mean, the S&P and the NASDAQ, they're trying to turn green now, but this thing's obviously outperforming. Biotechs tend to do that because they're more driven by news, okay? So I like biotechs. If you can get one at a good price, they tend to do their own thing, which is nice because you don't have to be dependent on the market risk. Okay, cool. Alex, good to see you. All right, let me see what else I have in the other chat here. Hey, from the Bay Area. Hey, ZM, he wants to see. Oh, Gmail, you did ask a question. Okay, I didn't see it, Gmail. Let's take a look. Is that Zoom? Let's take a look. Yeah, Zoom video. Okay, so here's the thing. We had a trade in this a while back, and I think that gets stopped out. This thing, so look at this situation, right? It kind of looks like, it reminds me of what gold was doing. So this thing found its low at 282, and it's trying to break this resistance now. This is a good sign of a change, okay? Because something that's in pullback mode, or basically dealing with bearish momentum, usually respects the resistance, right? It's not respecting it. Look at this. I mean, that's a nice strong close. We still have 30 minutes, but it looks like it's going to close this way. Okay, that's good. So that's a breakout. Here's the thing. So if you're looking at this from the swing trade perspective, the next question you have to ask is, what is the risk from this point? Because this is a breakout, all right? I just finished saying that breakouts, you can go for the breakout. It's aggressive, right? Because if you get the red candle right away over the next day or two, then it's probably going to fail and, you know, test its next support. That's the aggressive way to go about it. But where are the supports? Well, in this situation, okay, I'd be looking for the halfway point, which is around here, which is what? What is that? 300, the 300 area. Nice whole number. Okay, you're looking for some sort of reversal there. If it can test that area, if it breaks it, because again, you don't want to step in front of these just because it goes to a potential area. Price needs to confirm, all right? Otherwise, you may be stepping in front of, it's just going to keep going, right? You don't want to step in front of that. You want to avoid that type of randomness. If it clears that level, you're looking at, what is this? 273. So those are your levels. All right, as this thing unfolds, if you want to wait for more conservative prices. Otherwise, you know, if you buy this breakout now, you can define your risk from 321. How much is this thing right now? 343. So you have to risk at least 20 points, right? If you get into this now, you may not want to risk 20 points. If you say, it's too much, well, then you shouldn't take this trade, right? Or you can reduce your size, right? Instead of buying 100 shares, maybe you'd buy 25 shares. So now because you have to respect the market structure. Some people, what they do is they say, well, I only want to lose $100. So they put the stop $100 away in terms of dollars. The market doesn't care what you want to lose, right? The market bounced off of this 321 level or whatever, 318, whatever this level is here. It bounced off of there for a reason. It's because buying activity asserted itself, right? So that's what you have to respect, right? So anyway, those are your choices with Zoom. I mean, it's definitely doing a good thing. This is definitely a bullish sign, just not the best price. Now, it may continue higher. One thing you face, though, is you do face market risk with this thing. If the S&P and NASDAQ, you know, pull back over the next couple of days, this could be vulnerable to it. So you have to just keep that in mind. I don't want you to avoid taking a trade for that reason because Zoom tends to do its own thing anyway, right? It's not really a highly correlated market stock, but if there's a more pronounced sell-off, usually most stocks feel the pain. So just something to keep in mind. You're not buying a support here, you're buying a resistance, okay? So, okay, thanks for asking about Zoom. All right, let me see what else I got here. Okay, cool. Hey, from the Netherlands, nice to see you. Thanks for joining me. What do you have to say on BTC USD shorts chart? It shows big. Okay, those shorts and longs, that's a good question. And Tomaz, those longs and shorts charts, they're just giving us obvious information. I mean, I don't look at those. Here, I'll pull it up. I don't look at those charts at all. And I've looked at them. They have yet to really provide any type of value. I mean, look at this. It's like, okay, so what shorts? This is saying that shorts are increasing. So they're all piling in on the short side. Just the other day, they were all getting out on the longs. This must have been like that move to 39K or whatever, right? And now it's like, what is this telling me? It's really not telling me anything. So I don't go by any of this stuff, right? This is like a derivative chart, and I don't think it really provides any value. It's the value comes from the support and resistance levels from Bitcoin itself and the price action that develops around those levels. So thank you for asking. That's a good question. All right, let me see what else I got here. Oh, Southern California. I got a lot of people from the West Coast here. Thanks for joining me. All right, let me see what else I got. Jay. Hey, Jay, didn't you have a question about Unity software? I remembered that. Let's see if I could look that up here. Unity, what is the, it's U. Okay, let me just look that up. I remember he asked it earlier. Unity software. So this looks similar to that Zoom situation, right? So you have this little higher low that developed right here. It's coming off of this failed low. Now, what this is a great example of, this is a failed low right here. This is what you have to wait for sometimes for a more conservative purchase, right? You don't know that this is going to be the low, so you have to wait for some structure to establish itself so you could look back after the fact. This is when we talk about, and I mentioned it in my TradingView article, we would rather wait for better stability and forfeit the better prices. Trying to get these prices it can be very expensive, especially if you get stopped out a few times. Here, at least, you know, the bottom is in place, and now you have a potential higher low. So you also took out this little mini resistance here at 98. It's not a bad idea. You can define your risk. One level is that 92 area. It's a tight level because it's such a tight higher low. You also might want to look at the halfway point, right? From this low to this high, the halfway point, which is, what is that? $89, around there. Those would be good levels to see if you can get that type of price action. Otherwise, you're buying the breakout right now, okay? And you have to hope that this thing can at least give you some more bullish momentum. The question is, based on the structure that we can see, is the risk worth it? So if you're going to put your stop around, let's just say 90, let's round it to 90, and you're buying this thing, let's say you buy it at 98, that's 8 points of risk. How much does this thing have to go? Where's the next resistance, and is it more than 8 points away? Well, you get this 105 area here. Okay, what is this? 102, 105. So that's almost, I mean, what, that's like 7 points away? You know, so that you're almost at 1-to-1 at this point. So you can justify, again, that's assuming it tests this resistance here. Again, if the stock market gives you a hard time, this thing may just fool around and go nowhere. So you have to be prepared to adjust to something like that. But the bigger picture potential, I mean, if it clears that area, you have some room here. You have some room to run. Obviously, it's going to need some news or something to drive it to really get that thing going, right? But it's better than buying the highs. So you do have all that going for you. You just have to be prepared if you buy this now for that one support, or if you want to wait for more conservative levels, you know, the halfway point or the double bottom. We're probably going to see the double bottom would be around 76. We're probably going to see quite a few stocks looking like this right now, especially since the NASDAQ and the S&P are really trying to, you know, test these shorts. Look at the S&P. Right, this is what I mean. So if this S&P is at a potential double top, I talked about the NASDAQ earlier, but the reason why I have to bring this up again is whenever you're buying a stock, whether it's a swing trade or if it's an inventory, you should ask yourself, where are you on the S&P map? Because if this S&P starts breaking supports, you're going against market pressure, okay? So, and we're at a resistance, we're not at a support. So you have to keep that in mind. Now, it's conflicted. Just before, I was saying we're fighting a stimulus market, and this market wants to go higher. I mean, that's what it's trying to do. So it's a constant conflict. A lot of times, you're better off waiting stuff out, or if you're going to take positions, being more conservative until the market really lays out an opportunity, right? As far as longs go, I want to see the S&P at a support, and it just refuses to go to supports, any major supports. It just keeps bouncing off of these minor ones, which it's hard for me because, you know, I just don't have much faith in those supports, especially when we're on a high right now. I'd rather see a low of some kind. Anyway, okay, especially in a broader bullish trend. All right, so good question, Jay. So let's see what else I have. Range on BTC seems to be narrowing. All right, so I covered BTC, what I'm expecting there. Jesse from Poughkeepsie, my only New Yorker. Thanks again. Okay, no problem. RBLX, also words in general about price action on IPOs. Okay, so that's a good question. This one's 89 days out. So I guess RBLX is a IPO. All right, now this is interesting. Roblox. I've heard of this. They make like toys for like kids and stuff, right? They make like scientific stuff or whatever. I've heard of them. So here's the thing. IPOs. To answer your question about IPOs, we never go near IPOs on IPO day. That's just it's a big gamble. I mean, Coinbase what went to 420 like the next day, and Coinbase went straight to like 200 almost, okay, or whatever. So you stay away from those things. We like to let at least a month go by and then check back with the IPO. 89 days, so you're looking at a couple of months here. All right, so here's the thing. Right now, I mean, look at this candle situation. By the way, see this candle up in here? I want to make that nice and big so everyone can see that. This is what you don't want to see, right? This is what you don't want to see if you take a breakout trade. So all those breakout trades we just talked about, whether it's trying to break that resistance area, that lower high resistance, or it's in a range and it's trying to break above the range, if this is your next candle after the breakout, you don't want to see that. Okay, so that's not a sign of follow through. That's when you need to make that adjustment. And yes, there will be times when you get faked out, like we just looked at that one chart where you had that little red candle, and then if you may have gotten out on that and then it went up another $10, yeah, you're going to face those times, but you're better off taking the risk off when you see this situation, because you don't want to get caught in the pullback because you don't know how far they will pull back. Now, so Roblox, this is pulling back. So what do you do here? Wait for support. Where is the support? It's this level right here. Okay, nice range high, previous range high, 77, 78. You could round that to $80. This thing right now is at 93. So you got some room to play with there. Okay, I would wait to a test of that, like that area right there. All right, yeah, around $80. Right, see if it can get that low and then give you the reversal. That would be a good place to pick up some for a swing trader. At least it'd be worthwhile to take the risk. This is a nice breakout. You're just looking to buy the pullback, and right now there's no buy signal. So you have to see where that buy signal develops. All right, you may get something around this area here, around 90. You may get that because there was a little hesitation there. So that may be another place to watch, okay, to see if you get some kind of price action to go with you there. All right, so thanks for asking about that. Good questions. All right, let me see what else we got here. Western Canada. All right, so we got West Coast US, we got West Coast Canada. Can you go over US 30? US 30, are those the bonds? Wait, US 30. Oh, it's a Dow. Okay, I was going to say the bonds. No one asks me for bonds. Okay, so Dow Jones, right? 30, these are only 30 stocks. I don't really look at the Dow much. You know why? It's only 30 stocks. So it's not a very good gauge of the market. It's the industrial stocks. It could serve some purpose as far as economics go, but you got a double top. This is a double top, okay, right now. And look at this red candle. That's in line with a double top. Now the S&P and NASDAQ aren't exactly, we just looked at the S&P and it's trying to do a similar thing. But the Dow is minus 154 today. What's the NASDAQ? I thought the NASDAQ was green. Yeah, it's up 27 points. And what's the S&P? These things, by the way, should be moving together, right? The S&P is minus 4. Wasn't this just green when I started the stream? So, you know, the thing is, these things should be moving together. All right, do I have that symbol right here? US 30? Yeah, that's the symbol. That's what I'm getting. All right, because like if I put in US 10, for example, that's the bond market. All right, so anyway. These things, the major stock indices should move together. And if this double top sticks, then you're looking at a potential short. And we have no problem trying to short the Dow, the IWM, the Qs. I have no problem trying to short those things, okay? And we stepped in front of them a couple of times, didn't work out very well. But we limited our risk, okay? So this is another potential short idea. If it closes red, right, this thing's going to close in about 12 minutes. It needs to take out this low tomorrow. Or you could look at the previous day's low, 34,498. So basically 34.5. Where is this thing right now? 34,625. It's 125 points lower. So we have to see if that goes. If you get that sell signal, this is an opportunity to maybe buy puts on this thing, maybe short the ETFs outright, short some shares. And your targets are going to be based on these support levels, right? You have a support around 33,745. So you figure around 33.8 area would be a good place to start taking profits on something like that. What's nice about these situations, and the reason why I've always been trying to give these short ideas a chance is the reward risk, right? If this thing keeps breaking higher, you can get out for a relatively small loss. The thing is, you need to get out and take the loss if it keeps going higher. It's hard to believe that it can go higher, but you cannot become opinionated because these things can go as high as they want to go. Believe me, I've been caught short in those situations. It's not pleasant. So, you're looking at, what is this, 34,786 is the high? What's this high over here? 34,858. So basically 34,9, right? Or maybe 34,950. It really shouldn't go there if it's going to be a short. So that's a good place to define risk from in that type of situation. So thank you for asking about that. All right, so let me see what else I got here. Again, I appreciate everyone's questions. Tunisia, hey, I remember you. I've repeated the same over and over, but Solana has been pumping. Okay, can you have a look at it? Okay, Solana. Is that SOL? Let's see. I think that's SOL. Yeah, Solana. Okay. All right, I understand what you're saying, right? Pumping. But I'm sure this could be hype, right? There's a lot of people pushing. If you just go on YouTube and look around, there's all kinds of nonsense and hype. And a lot of people, they buy into this nonsense because they don't know any better. They don't pay any attention to charts. They just buy hope. They buy dreams, and they buy into whatever, right? And oh, look, this thing's up 15 cents, and I have $100,000 invested in this thing. Great. Yeah. Well, it's not going to go very far if Bitcoin can't. That's the thing, okay? So these things I noticed, they get like a little extra push here and there. This thing obviously has this little breakout situation, but this is high risk, okay? And here's why. So we saw Bitcoin. Bitcoin is not supportive, number one, right? So Bitcoin doesn't agree. You're right inside of this resistance. This here is a resistance. It's this previous range that it tried to break out of and gave it back. This area is going to act as a resistance, all right? And it's trying to right now. So don't go by what anyone says. Don't go by, some YouTube video saying you're going to be a millionaire. I'm sure you're not doing that, but I'm just saying anyone else that watches this stuff, you're buying into a resistance. Bitcoin, with this type of situation, sure, it's acting relatively strong, but the leader, let's go back to the leader, this is not supportive. So if this thing takes out 30K, where do you think Solana is going to go? It's going to start pulling back. You see, the problem with these coins is they're very slow. This is very slow. I mean, it took about a week. What is this? About a week's worth of data? What is this? 4 or 5? About 8 days from a low of 25.62 to a high of 44. Okay, so it moved, what is that? 20 points almost in about 8 days. That's not a bad mover. Right? If that was a stock, that's not too bad. But the thing is, you're buying this now in a resistance area if you buy it. So I would stay completely away from this. Look for supports at around the $35 area or possibly the $27 or maybe $25 area. Those are where your supports are. This area right here. All right, if you're going to get involved, your reward risk is better there and your probability is better there. This is a horrible place to be getting into this thing, especially with the way Bitcoin looks right now. So that's my thing on that. Thank you for asking. Andre. Oh, cool. Oh, I'm glad. Thank you. Thank you. Thank you for your support. Just real quick on that, I put that together. I'm not going to be specific because, I can't with TradingView, but I put that together basically to outline the techniques that I use, right? Because I still use them, that provide the most technical value. If you notice, I don't write about oscillators. There are no oscillators on my charts, if you notice. Okay, it's because they provide no value. No useful value because oscillators look backward, right? I need things to look forward. Elliott wave looks forward. Trend lines look forward. Support and resistance you could project forward. That's a really important part of this that people don't realize. Okay, so anyway, thank you for asking about that or mentioning that. Let me see what else I got here. IFC, Western Massachusetts. Oh, cool. Getting warm here. Yeah. Oh, yeah. It's about time. I mean, it's been warm where I am. It's like 90 degrees or whatever. It's crazy. New Jersey never gets that kind of weather, or it does sometimes. All right, but it's usually cold and miserable here, or at least that's the way it feels. HS, hey, good to see you. What do you think of Theta and VeChain? All right, let's take a look. So Theta, USD. All right, so again, Theta is one of these. It's moving slow. I don't like Theta. Here's why. If Theta was moving on its own, all right, this wouldn't be a bad situation. You have a higher low. There's a buy signal there and all that. That would be good. The problem is if Bitcoin slips and breaks 33.5 or 30. This thing is not going higher. It's proven that. Because when 40K broke, this is what theta was showing us, right? When all that broke. So this is just nonsense. It's just noise. Meaningless. I wouldn't touch it here. If you want to get involved in these things like theta, wait for the supports. Right now, your support on this thing is at 852. So the 850 area is one support. And now look at this. Look at this price action right here. I want to point something out in this area. This corresponds to Bitcoin levels because it's the same price action. All right, this low right here corresponds to the 30K low on Bitcoin. It corresponds to it. So if Bitcoin goes there, this thing may catch up. And next thing you know, you're like, oh, but it was looking good. Now it's back to, those lows again. Watch Bitcoin. All right, so I would not touch this thing here. These are just lures. They're just luring in people who don't know any better. So that's theta. But it is acting relatively strong. I won't take that away from it, but I'm not taking it. I wouldn't take any risk. How about VeChain? Let's see. So VeChain, again, this is even worse, right? So VeChain has the red candles there, the failed breakout. All right, this sucks people into the breakout, and this is what I was just talking about. You buy a breakout, and next thing you go, you get this red candle type of situation. It's not a pin bar, but that's a red candle. That's not follow through. All right, that's a failed breakout. So this is just fooling around a bit. Usually, if you get like two little inside bars, kind of like this is not exactly an inside bar, but it's sort of the same idea, and it breaks those lows, it's going lower. Right? Most likely it's going lower. That's what it's telling us. This whole structure right here is a lower high relative to this one. So I would again, I'd be looking for supports. Okay, your first support on VeChain is basically 9.092, right? Just over 9 cents. And then you have, what is this one over here? Just 6.5 cents, right in this area here. Those are your supports. That's what I'd be waiting for. Otherwise, no reason to get involved in these things. Again, I'm talking from a swing trade perspective. Keep in mind, if you're interested in inventory, as you know, small bites, you could take small bites anywhere. It's really a function of your size. I just don't talk much about inventory with these garbage coins because they're garbage coins and they're not long-term investments, most of them, because we don't know which one is going to be around in a year or in 2 years or in 3 years. We don't know. All right, if you go back to 2017, 2018, and all the garbage coins from back then, a lot of them are nowhere near the highs that they went to. Yeah, some of them popped up and some of them have done better, but a lot of them you'd never even heard of. Okay, there's one, Elastos, that Andrew talked about. I think at one point that thing was like $40 or $50. That thing's struggling at like $8. And oh, it went up to $10. I'm so happy. The freaking thing was at $50 3 years ago. Okay, so what good is that? If you're averaging into something like that, they don't come back because they're low grade instruments. They're not investment grade. If you want to invest in stuff, find high grade, stocks that pay dividends, like we do, and they're usually better for long term stuff. These things are all lottery tickets. All right. So and the obvious ones are usually the wrong ones to go into because, like I said, I tell this story all the time. 20 years ago, Amazon was, after the dot-com situation, Amazon was $5 a share. Okay, I know it's hard to believe, but no one 20 years ago, no expert, maybe the only one that had any vision of Amazon being at 3,000 was probably Jeff Bezos, because that was probably his goal and his plan. And F the retail traders, I'm not going to have any stock splits because I'm not going to watch my stock go from 300 to $5 again, right? But no one else was calling for Amazon to go to 3,000. No one. So you don't know, right? There's no way to know, right? So if anything, you want a high quality, investment. Anyway, all right. So that's my rant on inventory. Let's look at let me answer some more questions here. All right. How am I doing with time? Not too bad. Not too bad. All right. Let me see what else I got. Let me go by the other chat. LMND. Can we have a look? Have some LMND. Let's take a look. LMND. What is this? Lemonade. All right. Yeah, I could use some of that right now because it's hot. All right, so here's the situation. The broader trend, right? The first thing I always look for is the broader trend. This is the broader trend, that right there. It corrected the broader trend. Okay, fine, no problem. And it broke this support and it came right back above it. Okay, those are all good signs. Now, another good sign is you took out this resistance right here. That's a good sign, all right? That's a change of structure. That's a conservative thing to wait for because you don't know where that bottom is going to be in place. But now we have an established bottom. You're just not getting the best price. So as far as Lemonade goes, this looks very similar to Zoom. This looks very similar to the other one that we looked at earlier. I forget which one that was. But anyway, so you have this situation here. If you're buying this breakout, which is it's a valid trade idea. Again, you're dealing with that resistance. It could turn into a red candle on you, and you have to be prepared for that because there's no way to know if this thing is going to continue higher. Again, we just looked at the Dow and all those things. Obviously, I don't know much about the stock, so I can't say if it's a correlated stock or not. But if the stock market does put that double top in, the question is where are these going to go? So a more conservative thing to do, and maybe you can guess what I'm going to say right now, is you can wait for a pullback either to the middle or back to the low. All right. Now the low is a low probability, 58.84. You may not get that low. The market may not offer that opportunity again. Okay, which is fine. It's okay. That would be that low here, but maybe it'll give you the higher low. Again, we don't know if it will. It's just if the market chooses to give you that opportunity. That would be a great place to be looking for swing trades or something like that. Otherwise, if you want to take this risk now, you're looking at that resistance. You can put a tight stop around 93, basically 93 even, but that's today's low. The chances of getting stopped out are high. What is this thing at 99? The way this thing is obviously moving, that higher low would have to stay in place, and you'd really have to get a push through this resistance over the next few days. And you need to be able to justify that risk, meaning, if you're risking $7, if you can get $7 out of it, you should be taking profits, something off the table at that point. A lot of people don't do that. They meet the reward risk and they're like, I'm going to let my winner run, right? I'm not taking anything off the table because why would I? I want to maximize and squeeze everything I can out of it, right? And that's greed talking. So that's what you need to do in those situations. Again, you don't take it all off, you take some of it off, right? And you reduce your risk, and then you let the market ride and see if it wants to continue higher. Again, I'm suspect only because I don't like the general stock market, okay? I just don't like where it is, so I'm suspect of a lot of these things. Anyway, nice chart, and there is definitely a change in structure there. So you do have all those things going for you. Thanks for asking about Lemonade. All right, one thing I like about these community chats that we do here is people bring my attention to stocks that I may not otherwise notice, or whatever, and as a community we get more things on our radar, right? I'm sure a lot of other people weren't aware of a Lemonade either, and now we have some idea of what it can do and perhaps a simple trade plan. Okay, let me see what else we got here. So good question. From Iran. Hey, nice. Thank you for joining me. Thank you for welcome and thank you. I'm broadcasting from the New York City area, northern New Jersey, in case you couldn't tell from my accent. And just outside of New York City. Please, if it's possible, ETH. Oh, okay, someone asking about Ethereum. Right, Ethereum. I haven't gone over it because I want to see if people are asking for it. I haven't been getting a lot of questions about Ethereum. Let's take a look. That's Litecoin. Let's go to Ethereum. I'm not a big fan of Ethereum. Okay, so let's take a look here. You know why I'm not a big fan of Ethereum? Too much hype. Just way too much hype. And there's too many optimistic people about it. And when I see that, I'm just a contrarian. All right, doesn't mean it's a bad thing. It's just I just don't like things when they're overhyped. So here's the situation. This just like Bitcoin, I'm not surprised. Ethereum, as optimistic as everyone is, Ethereum is still a follower. All right, and look, it's proving that again. Lower high, just like Bitcoin at 40K. This is equivalent to 40K, 29.15. We can round that to 3,000. I was going to say 30,000. No, not yet. 3,000, we can round that to 3,000. That's equivalent to 40K on Bitcoin, okay? So Ethereum is doing like all the other altcoins, following the leader. Not only that, you have a bearish pin bar developing here. This is not what you want to see if you are long. This is definitely not what you want to see. Doesn't mean it will close this way. We still have a few hours before it closes. But if it closes like this and it takes out the low, which is 27.25, that's a sell signal at that point. So I wouldn't touch this thing. There's no reason to go long. For those that like to short these things, we don't short Bitcoin or any of these things, but I know some people like to do that. That would be a sell signal off of a lower high. if I was going to short these things, I would do it on a day trade time frame, not on a swing trade time frame. The risk is just way too high. At least on a day trade time frame, you can get a decent move and you can get out of it right away if you're wrong, right? And you don't get caught in that larger magnitude risk in case some news comes out and next thing you know, this thing is up like 300 points, right? So this thing is developing a sell signal, similar to Bitcoin. Stay away from it. If you're in it, you should definitely take profits, take something off the table and reduce the risk and see how this thing goes once it goes back to its supports, if it can get there, right? The next support on this thing is 2271. It's basically 2300 area. So it's a couple of hundred points, right, that this thing could pull back before it gets into any area that might be attractive for longs, okay? Then after that, it becomes about price action. So thank you for asking about Ethereum. All right, let me see what else we got here. Sure, okay. So let's go back. So CCL, okay, I'm going to get to that catch. Let me go over here. So, let me see, HS, okay, so, oh no, I'm just going back in the chat, Sorry, I'm just catching up. Hey, Mario, good to see you. Ayad, nice to see you. Zelta from Latvia. Are you use any oversold? No, I don't. That's a good question, Zelta. Oversold, overbought, those are backward looking. Again, I mean, what gives you oversold or overbought? RSI. Right? Those are backward-looking tools. They're useless. I know there are a lot of gurus out there, and they say, well, you know, it was overbought over here, and then I shorted it, and I made all this money overnight, and blah, 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 blah. It's random. So, you know, it works on occasion, but it's usually those type of tools are, depending on the environment that you're using them in, they have their place, but they can also create a lot of confusion, and that's why I don't use them. I can't tell you how many times I was thrown off by an RSI, CCI, you know, stochastic. I've used all of them. I've tried all of them for lengthy periods of time, and I can't tell you how confused they would confuse me. And I found that by removing all that nonsense, all that backward-looking nonsense, I'm able to navigate better because I'm looking ahead, not in the rearview mirror. Okay, so thank you for asking about that. Andre, could you look at, okay, what is that? I'm not familiar with this. Shuro Capital, okay. So let's see. You have a broader bullish situation, right, over the longer term, right, since November there. Since then, you've been in this range, okay? You're in this consolidation range, and you're near the range low. So you have that going for you. All right, I don't know what this gap is all about here. That could be a bad report or something. Not sure what that's about. But you have this range low developing. What I'd pay attention to here are the supports. You have support at $13, and you have another one at basically 11.5, right? Those are your supports. See if price can go into those areas. That would be a good place to look for reversals. Otherwise, you're nearer a support. But the thing is, this little structure here, it may turn into a lower high. So it's a tough spot, especially since you're facing this gap, this large gap. I mean, I don't know what that's about, but that could be a conflict, right? So it might be a little aggressive getting into this now. On top of that, you have a bearish pin bar developing, okay? I mean, the market's closed. This thing's closed this way. So if it takes out the low tomorrow, 1341, takes it out, you have a sell signal, right? That could be a lower high. So I would wait for better levels on something like this. But thank you for asking about that. Those supports may hold because the broader picture is bullish. You just want to see if you can get those better prices. Otherwise, one thing to do is you can reduce your size to adjust for the elevated risk that you have to take. So thank you for asking. And by the way, those gaps, like a big gap like that, that can act as a resistance in this case. So something to keep in mind there. All right, AMD. What would be good levels to get in? Let's take a look. AMD. So look, AMD, we've tried this a few times. What a pain this stock is. This is a market stock. This is going to follow the NASDAQ and the S&P very closely. It's highly correlated. So as you can see, right, now here's a situation that you need to keep in mind. AMD popped up a bit, right, recently, and it's luring a lot of people in. Because, oh, the stock market's safe again, right? Because the guy on TV told me it was. Okay, nice. But the problem is, right now, you're buying right into this area, which is basically a 50%. You're right in the middle of the range. Highly random, number one. Number two, you're buying in a 50% area while the NASDAQ and S&P are on their highs or off of a resistance. And we just looked at the Dow chart. coming off of a resistance. If they sell off, this thing is in a great position to sell off. So I wouldn't go near this thing at these levels. If you want to get into AMD, look at, and this is, by the way, an investment grade stock. I mean, AMD, we all know AMD. So they're a leader in their industry, 76.25. That's really the better place to get involved if you're going to get involved. Otherwise, you're talking about a lot of potential pain. Why take the pain if you don't have to? All right, I'm not very optimistic about these things going higher from this point, especially in the face of what that stock market looks like. They may fool around of maybe $1 or so, but your upside is limited and your bearish risk is high, right? So this is not a good spot. Wait for this lower range area, and you'll get that if the stock market pulls back. And like I said, let's take a look at that S&P real quick again, right? This is not a support level, okay, on the S&P. So thanks for asking about AMD. Very important with those market stocks. Okay, CCL. Let's take a look. CCL. Oh, Carnival. This must be the cruise lines, right? All right, here's the thing with these. So they had this recent breakout. You know what I don't like about these stocks? They're too hyped up on, again, like obvious, like conventional wisdom information. Well, you know, people are going to go back on cruises again, so I'm going to buy the stock. Right. That when everyone's doing it for those reasons, these trades tend to get like they tend to get bloated, right? With all the conventional wisdom people, and that's really not the side you want to be on. So look, from opinions aside, let's toss that opinion aside. Is this stock strong? Well, I see higher lows and I see higher highs. I can't argue with that. Okay, we took out this resistance area here. And now you're fooling around in the vicinity. You see that? So this is the problem with this. So it's trying to break out. And look at the recent price action. It's getting a little hesitant. Look at today's candle, bearish pin bar, right? So if it takes out that pin bar low, that's a sell signal. That's what I mean about these. So everyone gets all excited because, oh, breakout. Oh, now's the time to buy this thing, right? And then you watch Kramer and, oh, yeah, right, buy these things because, you know, everyone's going back out, blah, 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 blah. Right, the smart money has bought, right? And now you're buying it from them and taking it off their hands. That's usually how I see these things. So if you want to get involved in it, wait for the pullback. Wait until all these retail traders who just bought it for those obvious reasons get banged out. And this is the level right here, in the middle of this range. So you're looking at $28. How much is this thing right now? $30. They're almost $31. It's not too far away. It's only a few dollars. The better prices would be around 25, 24, 25. Those would be much more ideal prices if it can deliver such an opportunity. Okay, but the middle of the range, here's the thing. I just talked about another stock, right, that was in the middle of the range, or whatever it was we were looking at. And I was talking about how that's bad. But there is a time when it's good. And this is the time when it breaks out first. This thing broke out. Okay, cool. When it revisits the middle of the range, now that middle could be more beneficial. You know why? A lot of people are looking for that pullback, number one. And a lot of these shorts that shorted it, this is like the phenomenon. A lot of these shorts that shorted it are happy to get out for break even. Just like when you buy something and it goes against you and it goes back your way and you're so happy to get out for break even, it's the same phenomenon. That's what's going on in the middle of the range if you can get that price action. So that wouldn't be a bad area to be looking for it, okay? Again, the middle of the range is like those low 28s. So that's what I'd be watching for. All right, don't chase these things, especially these. All right, so thanks for asking about that. That's a great question. Let me see what else I got here. So Happy's from Kazakhstan. Oh, nice. Thank you. Thank you. Thanks for joining us and welcome. Ian, EOS USD, EOS USDT. Let's take a look. Okay, so here's EOS. And this is, again, a Bitcoin follower. This thing got beat up. This is relative weakness. I mean, this is not good, right, if you're long. This thing right now is got the lower high in place, just like Bitcoin, right? The lower high right here. And you're taking out this little inside bar low. What is that? $5.70. That's a sell signal, okay? So sell signal off of this support here, which is basically, we're going to round that. It's 563, but we're going to round that to 5.5. You take out that 5.5, this thing is probably going lower. Again, it's following Bitcoin. So if you're in it, you need to make an adjustment of some kind. That may involve taking a loss. Again, I can't give you investment advice, but I'm just saying, you know, you don't want to get stuck in these things, especially this relatively weak one. If this thing breaks, right? Of course, Bitcoin is going to have to break too because it's following. Bitcoin clears 30K, you're looking at 3.5 on this thing, right? That coincides with 30K right there. So that's the kind of risk you're taking if you're in it. If you're not in it, stay away from it. Nothing to do here. So thank you for asking about EOS. Let me see what else we got here. Hey, Portugal, nice. Portugal, I can say one word in Portugal. Obrigado. That's all I can say. All right, South Africa, nice. Oh, gold, of course, gold from South Africa. Of course you'd ask about that. I'm just kidding. Okay, so let's take a look at gold. I talked about gold earlier, but just real quick, I'll just mention it again. Higher low, looking for the higher high. Very simple. Nothing to do here in gold. You know, I was looking for a new buy signal. I've talked about that, but this candle is too big. All right, so I mean, it's like a 30-point candle. So there's nothing to do there. If you're, like I said before, if you're in gold miners, just let them ride. Nothing to do there. I mean, gold is strong. And now we have this inflation situation going on here. That's what it looks like the market is pricing in. Let it do its job. I'm looking for 1950 to trade, okay, over the next few days. So thank you for asking about that. Okay, so BTC USD shorts. I went over that. Again, I don't use those charts. I don't think they provide anything of true value, any actionable value. I get more information from, you know, the regular price charts and levels. All right, I know people like to get wrapped up. There's no need to get all complicated with these other derivative charts. They're not really giving us any valuable information, okay? You know what it kind of reminds me of? There's a game in the casino called Baccarat, and it's a rich man's game, and it's the original game of the original James Bond. And if you ever watch people who play Baccarat, they have these little pieces of paper, and they chart, you know, because they're looking at these outcomes or whatever on that come out on the table. I don't know exactly how to play the game, but I've seen people, and they chart. They actually draw charts, and I'm like, why are they drawing these charts for? The outcomes are random, right? So BTC USD shorts, it's like the same thing. Anyway, it's just a funny story. All right, let me see what else here. Argentina, nice, welcome. ABNB. Let's see, what is that? Okay, oh, okay, Airbnb. Let's take a look. So again, this is going to be one of those, you know, reopening plays. Again, here, look at these things. So right now, this is a good exercise that I think many of you should do. You should take note, like if someone's telling you, whether it's a guru, someone, you know, an expert on TV, whatever, and they're saying, oh, you know, this stock is a buy, blah, 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 right? Also, take note of all the positive news that's coming out around this time on these type of plays. What are they saying? Oh, people are going to be going back to this. They're going to be going back on cruises, blah, blah, blah. Look at the price of this thing. Now, Carnival at least had a breakout in play. This thing sucks. This thing's got a lower high developing, okay? This thing is, I mean, you got this resistance right here, old support, which is 161 area. And if you're buying this now, you're buying into a potential lower high, especially in face of a stock market that's on its, you know, at a resistance. No way would I go near this thing. This thing is a short potential. This thing is a potential short, not a long. Definitely not a long. But I mentioned, take note of what people are saying, because it'd be very interesting to see what they're saying at this point in time on the chart. Okay, I wouldn't be surprised to see a lot of hype and a lot of positive talk at such a level. All right, this is the worst level you could be buying this thing right now in terms of risk. I could be wrong, but this structure and this pattern is not favorable for longs. I mean, I can tell you at least that. Now, what would be favorable? At least another test of the low, 138. You're looking at 138 area, okay? Look for a double bottom there. If it can prove itself there, then at least you have something where you can measure your risk effectively, and you have a potential double bottom in play, and then you have a lot of upside at that point. But at this point, it's a possible lower high, and where there are lower highs, lower lows are likely to follow. Okay, so thank you for asking about that one. Florida, alligators. I like that, Jason. I like that. He moved to New Jersey, though. He's living in Jersey, from what I heard. Anyway, you know, where I'm from. Okay, so let's see what we got here. Okay, hey, Ruzum, nice to see you. Greetings from Chile. Oh, Claudio here. Okay, so I talked about Bitcoin. Yeah, I did. Look, when I'm done with my stream, you can go back and watch it at the beginning. I know TradingView, you can't like go back in the middle of it, so you just have to wait till I complete the stream. We're almost done here. I'm going to stay on for a few more minutes. I'm gonna try not to overdo it today, like I always do. Thoughts on Piton? Let's take a look. Peloton. I believe this is Peloton. All right, so look, now we just looked at a couple of charts, right? Like these comeback plays, whatever you call them, reopening plays. This one may be benefiting from that as well. But look at the chart. Better situation. So you have this initial push. Okay, that's good, right? Came off these lows. Okay, but more importantly, you have a higher low in place. Not only that, nice strong close today. How much is up? 672 today. Okay, not bad. So there were a few other stocks we looked at earlier that were in a similar situation. This thing is not giving you the breakout yet, but it might tomorrow. 113.91 would be the breakout price. This thing's at 104, so you're looking at like another $9, right? Your risk at this point is at, what is the low here? 101. So if you buy this thing at 113-ish, you're risking at least 13, 14, maybe 15 points based on that low. But that's where the market says the risk is, right? Now, you need the follow through from there. Here's the thing. So these are aggressive. I would suggest that if you're going to take something like this, it's not a bad idea. You just have to be prepared if the market rejects all of this, right? Which the market, the general market, is in a position to do just that. It just hasn't done it yet. So again, I can't predict that it will. All I'm saying is be prepared. So if you buy the breakout and it turns on you, like I said, with the bearish pin bar or something, make the adjustment, reduce the risk. That's all I'm saying, right? Don't get caught in these things. If it takes out this higher low, you're looking at much lower prices again. And I would assume that the stock market will be doing something similar. Now, I know this isn't probably not a highly correlated one, and it may be driven more on news or like, the reopening plays, nonsense stuff going on, whatever. But that's what you're looking at here. It hasn't broken out yet. If you want to take that breakout, that's what I would suggest. The other thing is, don't take lots of these, right? Like we looked at a few stocks that looked similar. Like for example, if there's 5 stocks that are giving you a similar look, don't take all 5 of them, right? Take 1, maybe 2, because if they turn the wrong way, you don't want to be emotional or reactive when they're going the wrong way. Because if you see a lot of red and you look at your P&L and it's really big red and you're like, oh man, you will be more emotional and you're most likely to bang everything out at a very not a very opportune time, right? It's a reaction. You don't want to react. As a strong hand, you don't do that, right? As a strong, oh, okay, this thing's not working. I'm getting out, taking a loss, no big deal. You're a strong hand. You're not reacting. It's showing you the look that you don't want to see. You get out, right? And you take a small loss. Small loss is the best loss. Okay, so good question there. Let me see what else we got here. Okay, thanks for Gmantle. Thanks for re-sharing that. Okay, checked on one of my thoughts. Naked, N-A-K-D. Let's take a look. N-A-K-D. What is this? Naked brand. All right, okay. Interesting. Let's see what we got. So this is, all right, here's what we have here. I like the long consolidation. I like that because when these things are asleep like that, no one's paying attention to them, they give you a lot of potential. When they break out, usually you get some nice moves off of these. So you do have that sustained consolidation. That's good. Now, recent price action, look, it tried to break out, turned. This is an example of you buy the breakout, doesn't cooperate, you should get out, take the loss, because this thing should not do that. That means the breakout is failing. You have to understand, when a breakout fails, what's actually going on in terms of the order flow. Everyone piles in long, okay, but there's not enough people piling in. So when the buying activity dries up, they all realize that there's no real buying activity, so they all bang it out at the same time, right? And that's what occurs. It's a phenomenon that happens over and over. You don't want to get caught in that. Now, with that being said, you have an inside bar that closed today. Okay, not bad. All right, so this may turn into another buy signal if you want to give that a try. It needs to take out the high tomorrow at 82 cents, basically 83 cents. All right, you're running into the same situation though. If you take the buy signal and it fools around on you, you need to be prepared to take that loss. Like I said, there will be times when it shakes you out and you take a small loss for nothing. You have to be okay with that. That's the market. There's no perfection to this, but there will be those times when you take it and you have a nice run, right? So on a run, when you get a run, and you're making 2 or 3 times or 4 times what you lose. When you lose, that's how you make money over time. If you don't have a positive expectancy like that, you lose more than you win, you will never make money. It doesn't matter how much action you take. It doesn't matter how many buy signals you take. I got people asking, where's the buy signal? Where's this? Where's that? I'm missing out on everything. Blah, 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 blah. They just want action, but action doesn't pay the bills, okay? It's just basically that's gambling. You need to make more than you lose. If you can't do that, you can't win, all right? It's a very simple equation, but it's not easy to accomplish. All right, so let me see what else. That's Naked Brand Group. All right, let me see what else I got here. All right, so I got to wrap this up soon. All right, so I'm going to do 5 more minutes. Again, I appreciate everyone's questions. If I missed your question, I apologize. Usually I can't get to them all because I have so many. All right, Kavi. Hey, Kavi. You're the guy that shorted Bitcoin. I remember a while back. How's that? I hope that worked out. That was like at 58K. Now, Kavi actually shorted it at 58K because he put it in our chat room. Hopefully you made some money on that one. And he called that on his own. Anyway, all right, so ADA, same situation as Bitcoin, right? This is an overhyped coin. I know people like the project and they're one of the better blah, blah, blahs, but I don't pay any attention to the fundamentals. It should not have produced this failed high right here. This is what I mean about the failed breakout. So I would have encouraged people. I would have said, you want to go for the breakout? Okay, go for it. If it gives you the red candle, gave you the red candle. Get out, take the loss. Because now, look, this thing shouldn't be doing this. You have a lower high in here and you have a bearish pin bar. All right, now this thing takes out this little inside bar low, which is what, $1.64. That would be a new sell signal. So this thing is not going to go anywhere without Bitcoin anyway. So you can't really spend a lot of time focusing on these altcoin charts. It's really Bitcoin. Oh, hey, Sheplik. Hey, thank you. 100 coins. Thank you so much. TradingView guy, thank you very much. I appreciate that. That's a good sign coming from him. Okay, so yeah, so that's the situation here with this ADA. Use Bitcoin as your guide, all right, in this. But this is not, if you're long, I don't know what to tell you. You should be reducing risk. The better prices are going to be near these lows, $1.34, $1.30. This low over here, what is that, $1.50? I'm sorry, that's the wrong price. Yeah, $1.34. What's this low over here? $1.05. So basically dollar even coincides with 30K Bitcoin. All right, so just something to keep in mind there. But right now, you have a sell signal developing. All right, let me see what else I got here. All right, so that was ADA. SQQQ, give us an update. Okay, yeah, that's a good question. And those levels to add. Okay, let's talk about SQQQ, because that's the NASDAQ short, basically. This is not working, all right? Now, I've been warning about this thing. I have an SQQQ position with the options, January options. They're like cut in half right now. I've warned about the risk on those things. The theta decay is very high. The market is not cooperating. I may have to exit those things. I'm just trying to give it a little more time because I bought so much time, okay? But the thing is, if you're going to do SQQQ, you're better off buying the ETF outright. But this chart by itself is useless. You can't really go off the trend here because this trend never actually changes. It's a derivative of the NASDAQ. So, and it's the way it's set up, it can never go higher really. It'll only spike higher when the NASDAQ pulls back hard. And we haven't had that. So as an aggressive trade, if you want to do this, again, you have to use the NASDAQ to judge. You can't judge that SQQQ chart. You have to look at the NASDAQ. How did this thing close? Up 54 points? Okay. So there's no sell signal in the NASDAQ, right? Can't do anything with this. If you want to get involved in the SQQQ, you're better off waiting for a sell signal to develop at this point, because right now you're stepping in front of something that may go to 14K. Based on this structure, there's no reason to sell it right now. So I would hold off and wait. At least, you know, you may give up a better price, but at least you go with a market that has more potential to go your way. You need to take your money off the table quickly with that one too, because every time we've been short for these pullbacks and the profit isn't really worth much, and if you don't take it quickly, now you got to sit through all this nonsense, right? And we're fighting a stimulus market. So as long as that stays the case, and we're fighting the inflationary market, there's going to be more reason for this thing to hold rather than break. Okay, so anyway, thanks for asking that question. Let me see what else I got here. I'm going to wrap this up here momentarily. Again, I apologize if I didn't get to your question. Yeah, just give me a couple more minutes. So what about gold, please? Can you tell me what to do? I can't tell you what to do. Okay, wait, hold on. Let me just go back. Let me go back. Okay, obrigado, right. Okay, so I went over naked. Okay, Meli. All right, so I'll do Meli. So Meli is like the South American Amazon, whatever, right? Mercado Libre, right? I'm sorry, free market in Spanish. So here's the thing. Look, you have this lower high right here. All right. Now, is this a bearish trend? This is not a bearish trend. This is a consolidation or a corrective consolidation, right? And you're near the lows of it. So this is not a bad area to consider this thing. How much is this? This thing's $1,324. So in this situation, I'd be looking for the double bottom. You have a potential higher low. Look at today's candle, right? That's a bullish pin bar. So you have a potential buy signal here tomorrow, which is what? 1327. So you figure around, give it a little room, 1350. Something like that, right? This thing pushes 1350. This thing's at 1324 right now. Maybe you give it a little more than that, 1360, just to give it a little room. That's a potential higher low, okay? And you got a lot of bullish potential in this thing, especially if it takes out this lower high and if it starts from this potential higher low developing. So it's aggressive still, but like I said with those other ones before, if you're gonna do it, wait for that midpoint. Here's the midpoint. Okay, that's one level to consider. So you have a trade setting up here. Your risk can be defined by this pin bar low, 1313. I'd give it a little more room since this thing's a mover. So I'd say 13 even. And then your absolute low is around 1265. So if you want to give it that room, that's more risk obviously, but you'd be looking for a potential double bottom there. If that breaks, this thing can get hammered, right? So you want to be careful with that too. You can adjust your risk with your size as well, even for the swing trade in this one, because when this thing moves, obviously it's a mover. All right, so thank you for asking. This is definitely a swing trade potential idea, an aggressive one, for that situation, but it could work out. So thank you, Meli. All right, and okay, hey, no problem. Hey, Lithuania, nice to see you. Thank you for joining me. All right, how about the QQQ? Interested to hear what you think about the market in general. Okay, so I talked about that. You can go back to when I complete the stream, you can watch the beginning because I talked about the NASDAQ and I talked about it again just now. What about gold? Okay, I covered that. All right. What about, thank you for, oh, no problem, no problem. I appreciate all the kind words. This is among the best sources. Oh, I appreciate that, Gmail. Shouldn't be free. Hey, don't give me any ideas. Don't say that on TradingView. You get them mad. All right, anyway. Okay, let me see what else I got here. Hey, Brazil. Got some guy from Brazil here. Obrigado. Again, what's your view on Tesla? All right, I haven't talked about Tesla yet. Let's talk about Tesla. All right, so look, Tesla is, Tesla is part of the S&P. So it's going to be affected by the S&P, right? And we know where the S&P is. So you have this little higher low developing. I don't trust the stock because of where the S&P is. You may get a little breakout situation here. And if it's an aggressive trade if you go for it. Your low is 577. That's where your risk is defined from. This thing's at 605 right now. I mean, if you want to risk 40 points on something like that, I mean, that's up to you. You need to take out this lower high at 635. That needs to be taken out. If you can make 40 points, you need to be taking money off the table in this area if it can get there. This thing right now is not really in a trend. I mean, the bigger picture trend is bullish, but this thing's consolidating, just like that Meli chart we were looking at, and you're near the range low, which isn't bad. But you just have to be prepared. If you get involved in something like this, the midpoint of the range is really where you should be looking for profit targets, not the high point of the range. I know everyone's optimistic and blah, 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 and they're going to change the world and all that stuff. And look, Tesla's not a bad company, right? They're doing some great things. But because of where the stock market is, I don't like to sit there and give it that, hold everything that I got till the range high. It may not get there anytime soon, okay? It may find some resistance up in this area here, 694, 700 area, and turn right back around. Keep in mind, you have to use the stock market as a gauge for something like this, okay? And that S&P is not exactly in a favorable area. So just something to keep in mind, okay? Like I wouldn't call this one just for those reasons. Okay, so thank you for asking. Just because I won't call something doesn't mean you don't have to take it. You have to decide if the risk is appropriate for you, okay? And for some people it is, they don't mind. Some people, they're not sure. If you're not sure, don't do it. Okay, that's the best way to go. What indications could we consider when a market bottoms? Okay, Abraham, that's an interesting question. I look for price action, failed lows, double bottoms, right? That's what I want to see, especially near some kind of predetermined support level. That, like, and I'm going to give you an example real quick, right? We'll go back to gold, right? Because I called this gold bottom, and it wasn't because, like, you know, I'm just a bull on gold and, you know, gold could do no wrong, because gold was getting hammered, all right, back here. But this gold bottom developed, right? Double bottom, we got the buy signal, and I went long because it was a double bottom. But now, why was I so confident there, right? Why was I so confident? I'm going to show you why. Because when you zoom out, this is a higher low against the bigger picture. Not only that, but in that same area, right? If we go back, this, right, this consolidation right there, we'll call it historic. It's an old support level, right? Which is now acting, it's a previous resistance, it broke, and now it's a support level, historical support. We revisited that area, the general area. Now again, alone that's not enough, but when it all lines up and I got a buy signal, hey, I'm confident that that's a potential bottom. And so far, that's the bottom of gold, okay? So I hope that answers your question. They don't always work out like that, and that's why we always have to keep risk as our priority, risk. If that 1675 broke, we were long at 1720. If that 1675 broke, we'd have to get out and take the loss, because this thing could have went to 1650, it could have went lower, right? You don't know. That's where really the emphasis needs to be on risk. After the fact, this looks great. You're like, wow, that's an amazing call, right? But you have to be able to do that while it's developing, right? Not after the fact. So thanks for asking. Let me see. So a couple more questions. How am I doing with time? I got to wrap this up. Hold on a second. I just got to check. Yeah, okay. 2 more minutes. I'm out of here. All right. So let me just see what else I got. I ordered some silver coins over a month ago, and they're still not. Okay. The U.S. Mint is complaining they cannot get silver blanks to make new remakes. Okay. Well, so here's the thing. The gold and silver, I mean, those are highly manipulated markets to begin with. There's been a shortage. That's nothing new. There's been a shortage for gold and silver for months and months and months and months. We've been talking about the shortage in gold and silver, and that's when gold was pushing lows, okay? And there's been a shortage, and and we're like, why is gold pushing lows when you can't get any physical gold? Because, you know, we know gold dealers and stuff like that, and there was no physical gold and silver. Couldn't get any. Meanwhile, the market was pushing lows. Paper markets are manipulated because they can create as much paper as they want and sell it. All right, and that's what was depressing prices. They could say whatever they want, but that's typically the reason. And you know what? With Bitcoin nowadays, I mean, I don't know too many people talking about this, but you know, there are a number of futures contracts, right, on the CME, which is paper Bitcoin. Okay, so that can affect the price action because you're going to have arbitrageurs, you're going to have market making firms using that to their advantage because they can. And it's going to affect the price of Bitcoin when all that paper is floating around. So just something to keep in mind. You can't really trade off of that information, but it's good to know. Okay, cool. All right, so I went over gold. All right, cool. All right, so I'm going to wrap this up. Yeah, so on Bitcoin analysis, I did that earlier. Once I complete the stream, you could watch it from the beginning because I covered it in a lot of detail there. All right. Oh, we got a guy from New York City. The guy from, Zach Zalmosis. He's the other guy from the city. The other guy is from upstate. Jesse's from upstate. This guy's from this city. All right, cool. City guy. What's your view on shorting Bitcoin? Okay, so all right, I'm going to answer that, and I'm going to wrap this up because, again, I appreciate everyone's questions. I apologize if I missed your question. All right, so let me just talk about that because a lot of people like to short these things. Like I said, and I mentioned this before, you do have that sell signal developing, all right? As a day trade, I would be open to the short. Again, we don't, just to be clear, we don't short Bitcoin, we don't short altcoins, we don't do anything like that. Our strategy is long only. But as a day trader, there's a lot of opportunity, I think, in these markets, but you really have to be nimble. If you're new at this, I would not recommend that strategy. But if you were going to short it, the whole idea about the day trade is you take a small bite. You don't sit there and think you're going to make 10,000 points. You sit there and you try to grab a couple of hundred and then you're out. Okay, that's the way it has to be. Otherwise, you open yourself up to enormous risk. So as far as the short side, as a day trade, I'd go for it. Okay, it's super aggressive. Let's just look at a smaller time frame. I never look at smaller time frames, but for a day trade, right? That's really what you have to look at. So, here's the thing. You have this support taken out. You're sitting at another support right now. You have a lower high over here. So it needs to clear this support. You may have some room here to deliver, again, a couple of 100 points maybe. But this thing can easily bounce off of here and bounce big. So you don't want to get caught in that, right? That's where people make a mistake with these smaller time frames, because they sit there, they focus on their 30-minute chart or their 1-hour chart or whatever, and they assign that the same weight as something like this. This carries all the weight, the daily chart. And right now, you may break this daily support and you have some room to run maybe to 33.5. That's your potential right there. And that would be a home run if you manage to get that as a day trade. Meanwhile, your day trade risk really can't be more than like 100 points, 150 points, right? If that's all you're looking to make. If you get into a day trade and it goes 500 points against you or 1,000 points, then you're defeating the purpose, right? You're not in a day trade, and now you're taking enormous risk. So that's how I would handle a short on something like this. Again, those are the supports. Now, if it clears those supports, yeah, you could try to let some run, but you're shorting near a potential low, a major low. And there's going to be a lot of buying activity. They're going to try to step into this, as they have, right? We can see a lot of evidence of buying activity. It's just not following through. But it doesn't mean they won't try again. As a short, as a bear, you do not want to get caught in that. So that's why you need to keep your magnitude to the day trade time frame, where your risk can be controlled much tighter, right? Again, you can't be risking 1,000 points or 2,000 points on a day trade, right? And you really shouldn't. And as a swing trade, the potential to go against you here is enormous. So, that's why, again, just to be clear, I don't short Bitcoin. All right, anyway, all right, so that's it. I'm going to wrap this up. Hey, thank you all for joining me. I really appreciate your questions. I apologize if I missed your question. I do other streams, so you just catch me every Monday. I simulcast on TradingView, so you can ask again there, or you could find me elsewhere during the week. So again, I want to thank you all for joining me from wherever you are in the world. I mean, we got people from all over the place, and it's always exciting for me to see. I know it's got to be midnight in some of these places, so you people need to get some sleep, because it's ridiculous. You shouldn't be watching me at midnight. Really, what's wrong with you? No, I'm just kidding. Okay, so anyway, I want to thank you all again for joining me for my stream. And if you have any other questions, again, just catch me next time and I'll be happy to answer them. Also, on my TradingView article, if you haven't read it, check it out, because I made some valid points in there as well. Okay, so I'm going to leave you with that. I want to thank you all again, and enjoy the rest of your evening or your day, wherever you are in the world. Thank you for watching.